Hello traders. One thing you're going to try to do when you first start trading is getting as many pips as you can during the day. I know I do sometimes because for the most part I trade about 8 hours a day, and this is at nighttime. I would say about from 7 p.m. to about 6 p.m. If I'm to about 6 a.m. actually, if I'm really up to it. And once I wake up from bed, then I trade again. So, but one thing that you're going to want to do is catch every trade and try to catch every pip. And one thing that certainly helps you accomplish that task is called a Heiken Ashi. Um, so let's get started. So you would right click on the chart, click on Add Indicator, and then you would use the scroll down button and to find this indicator called HA, and it's right here, Heiken Ashi chart. You double click on it and just hit OK. So you see it's pretty different from what you just saw. Like I'll do it again. So just to remove it, you just right click and hit remove. So these are regular candles. So basically what a Heiken Ashi actually does is it gauges the momentum of the candles. So for instance, a regular candle, if it's the reason why this candle right here is green is because it closed above the low of this previous candle, and the reason why this one was red was because it closed below the low of this candle. And we'll explain that in other videos. But what Heiken actually does, it actually acts as a filter. So you're not going from green to red to green to red and so on and so forth. So let's do it again. So we add indicator, and then we double click on HA. We hit OK, and voila, it looks a lot better and a lot cleaner. I actually like this chart. So basically what this is telling you is it's exactly what you think. If it's a green, you would buy. If it's a red, you would sell. And that's basically as simple as it is. It's one of the simplest and least tasking thing that you can actually do while trading, because you're basically trading off the candles and off the colors. But a lot of traders, they swear by it, and it can be very effective if you trade it consistently and if you have a specific way of entering it, and I'll explain that in a minute. But let's start right here at 8 o'clock at night, and let's try to cover about 12 hours. So basically what this is at 2000, which is 8 o'clock, it was red. So basically you sold. So you went from 80.58 to 80.42. That's about 16 pips, give or take your spread. So that could represent about 1.5% return on your investment for that day. And again, guys, this is a business. I try to tell as many people as I can that we are in the best market in the world. There is no business that you can do where you can realistically make a 20 to 25% return on investment per month. It's just unheard of. Well, so they say. Over here at NEWAYFX, we teach you how to do these things, and we teach you very, very simple techniques whereby you can incorporate them on your chart and begin earning a living immediately. You can go to a lot of websites and they will try to bombard you with a lot of technical stuff like Fibonacci's, trend line breakouts, head and shoulders, pivot points, and so on and so forth, support and resistance. Hey, over here we teach you how to make 1 to 2% return on your investment every day, because we try to gear this to people who are more career minded and not just people who just want to make a quick buck. This is something that should be taken very seriously, and if you do, you should do very well. So anyway, back to the charts. So you made about 16 points there. Well, as you were, we made about 16 pips. So this is green. You know what you're going to do. You're going to get out of that trade, and then you're going to get into a new trade, which is a buy sell. And this is a buy signal because it's green. So you went from 80.52 and it went all the way to 80.60, about 64. So give or take, you made about 8 pips, which isn't bad. So it came back here again, so you would close that trade and come back here, and it's red, so it's 80.52, and it went all the way down to 80.50, about 58. So that's pretty close to about 45 pips, give or take your spread. So that could represent between 4 to 4.5% return on your investment for that day. And bear in mind, guys, this is essentially, if you took all those trades, I'm assuming that you're probably up about 35 pips, which could represent about 3% return on your investment in about I'd say in about 5 hours. So that's not a bad day's work at all. So it goes on and on like that over and over. So you went in here, you bought this one, you didn't make much money, you came over here, you sold it because it was red, and boom, it went from 97 to 73. That's about pretty close to 25 pips. So you made some money over there. So that's basically it. There are a lot of traders that trade by it, and this is one of the main components of what we use in the New Way Strategies tab on our website. But we trade it a little differently. Not only we already know that the Heiken Ashi is a filter, but what we try to do is we try to filter it a little bit more. So we filter out the noise, so you can get in an even more precise entry. So if you're a member of that of our site, you will gain access to that and see exactly how we trade it. So I hope you enjoyed this. Thanks.